Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bank of China interim report. The Bank of China Limited offers a wide range of businesses and services across various segments. These include corporate banking, current accounts, deposits, loans, trade-related products, foreign currency, derivative and wealth management products, personal banking, savings deposits, personal loans, credit cards, debit cards, payments and settlements, wealth management, funds and insurance agency services, treasury operations, foreign exchange transactions, interest rate transactions, money market transactions, proprietary trading, asset and liability management, investment banking, debt and equity underwriting, financial advisory, sale and trading of securities, stock brokerage, investment research, asset management services, private equity investment services, insurance, general and life insurance business, insurance agency services, other services, debt-to-equity swaps, aircraft leasing, financial leasing. The Bank of China's stock price has experienced a significant increase of over 22.89% in the past year due to several key factors. Attractive dividend payouts have been a major draw for institutional investors, with some Chinese banks offering yields as high as 60%. Government support and stimulus measures have also played a crucial role, including restrictions on major shareholders selling stakes if companies did not meet dividend benchmarks. The bank's improved financial performance has contributed to the upward trend, with earnings growing by 11% over the past year. Favorable valuations and increased investor confidence have also been driving forces, with global investors beginning to acknowledge a positive shift in Chinese stocks. Finally, signs of economic recovery in China have stimulated corporate credit demand, enhanced bank asset quality, and eased pressures on net interest margins. The primary drivers of revenue growth for the company include a significant increase in non-interest income, net fee and commission income, and other non-interest income. The introduction of new elder care wealth management products, launch of digital platforms, and development of green finance management also contributed to revenue growth. Additionally, the expansion of cross-border RMB settlement volumes, increased financial support for foreign trade enterprises, and growing market influence in cross-border business all played a role in driving revenue growth. On the other hand, there are no specific drivers of revenue decline mentioned in the report, except for an increase in cost of sales of precious metal products and staff costs. Net income and profit margins. A shift in trends. The net income of a company has undergone significant fluctuations, with a decrease of 0.2% from Rm 126,536 million to Rm 126,138 million. However, when compared to the same period of the prior year, it increased by a substantial 25.7%. Furthermore, there was an increase in net income of Rm 116.663 billion in the first half of 2025. Profit margins have also experienced changes, with operating profit margin decreasing from 46.2% to 47%, but increasing from 45.6% to 46.4% at another point. Net interest margin decreased from 1.67% to 1.26%, while non-interest income to operating income ratio increased from 26.81% to 34.79%. The reasons behind these changes are multifaceted, including adjustments in interest rates, loan growth, and operating expenses. Improved liquidity risk management and enhanced financial stability have also contributed to the shift. Additionally, growing market share among comparable peers and increased demand for personal banking services in the Chinese mainland have played a role. Overall, the net income and profit margins of the company have undergone significant changes due to various factors, indicating a dynamic and evolving business landscape. The company's financial performance suggests a strong ability to generate positive operating cash flow. The data points consistently indicate an inflow of cash from operating activities, with net cash flows ranging from RMB 33,639 million to RMB 62,020 in various periods. This indicates that the company is successfully managing its operations and generating sufficient cash to meet its financial obligations. The financial summary reveals that certain segments and regions have shown notable performances. On the positive side, commercial banking business has seen a significant increase of 2.19%. Additionally, Hong Kong, China, Macau, China, and Taiwan, China have excelled in corporate banking, personal banking, and investment banking. However, there is one area that stands out as underperforming. Investment banking and insurance experienced an unusually high growth rate of plus 34.03%, indicating a poor performance due to its exceptionally high growth. Management is emphasizing the company's commitment to aligning its strategies with national goals. The bank will continue to adhere to Xi Jinping thought on socialism, with Chinese characteristics for a new era, and implement plans of the CPC Central Committee and the State Council. Key areas of focus include building a comprehensive ecosystem for technology finance and promoting green development concepts, enhancing financial services in the consumption sector, and improving consumer finance services, strengthening competitiveness and market position in Hong Kong. Focusing on key areas such as technology finance and green finance, investing in green finance and technology finance to advance transformation towards asset-light operations, digitalization, and automation of processes management is also prioritizing credit risk management, optimizing credit structure, and balancing growth with stability to support high-quality development. The company aims to maximize shareholder value through a reasonable balance between risk and return. Overall, the bank's strategy is centered around promoting green finance, technology finance, and digitalization while maintaining a strong market position in Hong Kong and adhering to national goals. The company has a history of paying dividends to its shareholders. This is evident from multiple references throughout the financial summary, including specific details about the payout ratio and dividend amounts per share. While there is no mention of share buybacks, it is clear that the company prioritizes returning value to its investors through dividend payments. That concludes the financial summary for Bank of China. Feel free to comment below, and I will be happy to answer them when possible.